What's up everybody, Tom here with another video. In today's video, we'll be talking about all of this volatility that's come into the market over the last couple of weeks. We're talking about the key zones that you should be looking at and why these make sense for pullback zones, and also how important is this current support that we're on for the S&P 500 and Nasdaq. It really looks like the decision is going to be made possibly over the next 24 hours on whether we continue this move down or we get that nice bounce. Is it a tasty dip or is it something to be concerned about? Stay tuned to find out more. All right, everybody. Well, here begins our market recap for the markets closed 29th of September 2021. And we always take a look at the heat map of the S&P 500 to have a look at the most valuable companies, but also the biggest movers. Our eyes are on the FANG right now, and the FANG were not leading the way through the indecision. Healthcare looked like it was up, but the FANG certainly wasn't. We also have another interesting chart. This is from the Felder report, and you'll notice here it has the number of components valued at over 10 times revenue. We've actually breached here any of the previous levels, including the dot-com bubble. Now, there are similarities between these two kind of things in terms of high valuations, but just remember, when you see these types of things, this over here was website domains. Some literal companies were just website domains. Over here, there's a lot of scalable businesses that have to come through. And why I want to bring this chart up is I wanted to just remind people that if you're trading big growth stocks, when they're hitting their crazy growth targets, of course, you're getting great gains. But if they miss one earnings, if they miss one earnings, you can be in the vicinity of a 20 to 30% bust up on these types of stocks. And many people are just coming into the market. If you've been around for a while trading, let us know in the comments down below if you've seen this happen before to one of your growth stocks. When they miss once, it can be brutalizing to your portfolio. So just remember, guys, keep that in your back of your mind. It's all about sentiment and all about this continuation of exponential growth. You miss once, bam, down it comes. Keep that in mind when you're taking a look at these markets. Now, what have we had over the last 24 hours of trade? Well, we had up, down, and all around. At one point, we're up as much as 0.8% plus on the indices early. Then we sold off to being down as much as 0.4%. Then we went all the way back up to 0.8 and we ended up flat to down. Now, Wall Street was selling into the close, which is really all we care about. And what this is proving is that the current levels that we've got and we've hit on the S&P 500 and Nasdaq that we'll be taking a look at soon are super important zones. A close below and follow through should lead to further selling. And I mean a proper correction, like a correction back to some very key levels we'll be taking a look at. Whereas if we bounce here, then this probably is going to be as low as we get. This is the bounce level if it's going to happen. It's an important divisive thing. We've got Fed Chair Powell coming out to have a chat. Will he push it lower accidentally? That's always possible. I'm pretty sure he'll say the same thing as usual. We'll use all the tools, guys, all the tools, and then he'll use about 3/4 of them. Let's have a look here at the sectors that were doing well. Now, here's the interesting linchpin. Take a look at the sectors that were doing well. Utilities and consumer staples and healthcare. Now, when Wall Street rotates into these, what is it doing? It's moving into defensives. It's the first sign that through all of the last 24 hours of trade, they were going defensive rather than, of course, going aggressive. When we see utilities and consumer staples go up, that could be an early warning sign that they want to smash it through this current support, or at least that's what the perceived action is. Let's take a look at the PCC, getting into our technical analysis before we go to the key levels. And you'll notice the PCC came down, so that means that through the last session of trade, there were more calls open than puts. That's also a good sign in terms of the market really being able to possibly move lower. Remember, if there's too many puts opened, it becomes unlikely the market will go down as it doesn't want to pay them out. But let's now take a look at the SPY and the S&P 500. So it's acting very technically. We know that it's gotten to below our 50 exponential moving average. We know we're getting close to a cross of the 2050. This has not happened for a very long time. In fact, let's go back. It hasn't happened all the way since the the pandemic crisis. So over here, we had the May period and it crossed above. We've been above the 2050 now for a very, very long time. If we then have a look at the current sessions and the current kind of movement, We've hit that support around that 433, and we know 430 is where the big bulls have been in terms of the huge accumulation, but a close below this 433 inevitably will lead to 430, and a close below 430, then we start talking about 420 and 400. Yes, I heard that, said that, 400. This would be a peak. So a peak move down to a trough, lower peak here, and then lower trough. What is that? It's our sequenced lightning bolt thing we talk about all the time. The change of trend on a higher time frame. It cannot be misrepresented. This is the big type of thing that happens in markets should it occur. Now, you always need to be bullish and optimistic in markets. So if it goes above that 445 level up here, do we believe that the bottom's completely in and we go to new all-time highs? I think so. I think at this point you would be a little bit ridiculous to think that if we closed above here, we go up here and then sell off. It's very unusual. In most technical circumstances, if it does bounce, rally through this zone, what you're doing is basically putting in a double bottom, and that leads to a new all-time high. It's what you've seen before. You can have a look at it over here on the left-hand side, learn about how the price action is represented, and when those types of things occur, just like over here, if that is what does happen, look at what happens. It goes up, gives you another buy opportunity, but overall, that was the low printed in the price. So we're at a precipice of very, very important price. Same thing on the SPX. If we go down to the 2 hour to understand the price action, what you'll notice is that we now have a huge range here, or at least a decent range, between the buys and the sells. Look at this long leg doji indecision candle, bullish hammer or pin bar, long leg doji rejection style candle. We have a huge resistance, we have a huge support, and we know that the session will trade within here, but a crack either way should lead to the next level. A break below, bam, 4,300 king comes. A break above, likely that we get a movement up to the 44.33. The previous support becomes resistance. This is good because it means it's consolidating, it's resetting those indicators, and if the trap's going to be set, it looks like it's going to be set around these areas. So we're getting some more clarity on the market now in terms of where it would like to close. Where it would like to close then becomes the biggest question, and we can always learn from Wall Street's options and, of course, maximum pain theory. That is, if we close at the perfect zone, where does Wall Street make the most amount of money for expiring options worthless? Remember, the stat is 70% of options expire worthless. So when you see nice big call walls or put walls, would the market be above or below these points by the end of expiry? This case, the 1st of October, this Friday, it tends to not want to be there. We've talked about this, and around here, so around that 430 area, 435 is actually the perfect zone for them to close it at. So if you were to kind of put a curve in here, effectively somewhere in this area would be where they would love to close it for Friday. And that's consistent with the current price action that we're seeing. Do they want to close it underneath 420? No. 420 is clearly a put wall. And would they want to close it above 450? No, that's clearly a call wall. So that's how we learn from these options. We know we've got a trading range. And while you might think, well, Tom, that's not very good accurate. That's a huge range here. What you're doing is you're just realizing that the market wants to gravitate towards those zones or stay in between them. And you use your price action to just trade within those zones. You don't get greedy. You take your profits at the put wall and the call wall, if you understand what I'm saying. Be fast, be nimble, be quick. We still have huge amounts of calls opened on the 15th of October. We've talked about how this really, I believe, was limiting the market. A decent amount of puts coming through as well. But in comparison, you could pay all of these puts out and still make tons of money off the call, because the call is literally 2.5 times larger than any of the put walls. A massive deal here. Let's move over to Tesla, start talking about this one before we go back into the indices such as the QQQ, Nasdaq, etc. And Tesla did come down, 780. It's basically hovering on support. Let's go to the 2 hour here to understand where we're at. And on the 2 hour, it's consolidating. I think Tesla's showing again that it's got this strength in it that other markets don't have, other stocks don't have. We've seen Apple fall off a cliff. At the same time, the elasticity of Tesla has been much better. We have a 760 previous resistance that could act as support. We've got our longer term trend line, and overall it's just consolidating. So look, where does the bigger kind of bulls come in? A break of 800. Do we expect that this week? Probably not, but we don't expect, a big shock underneath 760 either from a technical standpoint. That Tesla's kind of nicely trapped and it's sitting in a good range. If we have a look at the options for Tesla, a huge amount of puts continue to be loaded on Tesla. It just gets higher and higher each day we check it for Friday. I don't know why they're doing this, but anyway, that's where they are. And calls have increased. So we've got 800 kind of being the call wall here. It's not huge in comparison, but certainly is a restrictive level. And I've noticed that this must be retail. Retailers are YOLOing, for lack of a better term, on Tesla. They're putting in 890s, they're putting in 830s, 840s. All these different calls have started to be open closer to the end. So this is what we call the YOLO, and I doubt they get paid, but good luck to them if they do. Very dangerous a few days out, but I'm sure it's very, very cheap as well. Let's have a look at Apple. Apple continues to weaken. We've been pretty correct here about this support. We've had this line drawn up for a while. I made no secrets that I prefer this trend line down here as the correction area. If this does occur, I'll be pretty happy with it. That's about a 130, 135 for Apple. We need to close underneath this, and this is probably the line you're looking at. The Nasdaq's already closing a little short, and it's like what we call a marginal close. It's not enough for us to go, oh, okay, yes, I know this is going down. It's just enough to say, oh, maybe you would scale to the short side. But I think Apple shows the way here. If Apple closes underneath these previous lows, it's going to be creating a very good pattern. What is that pattern? It's the lightning bolt. The peak, the trough, the lower peak, bam, bam, bam. So there it is, the lower trough. We get that change of trend. Unlikely that the market can pick up before it gets down to this 135, 130 zone. And then I'm sure a lot of big Wall Street buyers, there's no way in my mind that the big hedge fund managers are not showing this trend line. This trend line would be one they'd be looking for their clients. Apple's a solid stock. And I have a feeling that if this hits, the Nasdaq's going to hit the very key support trend line as well. So we'll take a look at that in a second. If we have a look at Apple calls, another reason why it's unlikely to go up much, take a look at how many calls have been opened for the Friday expiry in comparison to the puts. It's really astonishing how many people have gone bullish here. 150 call wall, very, very strong. People have options past 170, like a 175. Hey, I wish them all the best, but that seems like crazy money to me. And it isn't in the best interest of the market if they're getting this many calls through to allow Apple to get up much, because you can see through the last session how many extra calls compared to yesterday's video have gone through. Let's now move, before we go into the QQQ, to the dollar index. This is the discussion that everyone is having, and it's massive deal. This could create big swings here, and the weekly is certainly looking like it's going to close above that previous 93.50. Forex currency traders would have been incredibly happy with the moves yesterday. The euro, the pound, US dollar, amazing, amazing trades, fantastic stuff. It's the same stuff we teach on this channel. So if you're interested in currency, you can check that out. But dollar index, really powerful. Double bottom here. This is unlikely, if it closed above, to be a fake out. It's very rare that you get these weekly fake outs. It's very rare that you break past even the 50 and don't continue to move up here. But this is big deal. Long leg doji into big bullishness. Could we still turn around? Yes, I think there'll be buyers here if we do move down. I would expect us to hit the 200. That's kind of the resistance of the previous point over here, and then find a little bit of pullback. But this will create swing trading bliss for many currency traders. And what does this technically mean? Well, many people look at the dollar index being up as risk off in the markets. That is, money is flowing out of the markets, big money, and going into the US dollar. And some people won't be able to understand that. Don't question really why. The fact is that you can see it in the charts. The price action is telling you the way. Your opinion means less than the price action, if you know what I'm saying. Your opinion could be wrong, but the price action's not really wrong. It's telling you what's really going on in the market. So potential risk off here, big movement, double bottom on the weekly. Wow, I'm telling you what, I've got this 97 laid out, and I wonder whether we get some great swings in here. Swing traders will be around for that one. US 10-year has hit our resistance that we talked about, 155. It's pulled back a little bit. I think after a pattern like we've seen here on the US 10-year, it seems inevitable to me that it continues to go up. While it does pull back a little bit, I wouldn't be surprised at all to see the 10-year at 1.7 to 1.75 over the next couple of weeks. And then I think we eventuate towards 2%. It isn't really rocket science to think that that's going to happen. It's highly likely we go to 2% to freak the markets out. We've talked about this level being a very important key zone that many will be looking at. 1.95 here, previous support, previous resistance before the pandemic. And a lot of people have this inflation concern. So if it does get through 155, we expect something like a 1.7, a 1.75, and then a 1.95 should the bulls continue in this case. Will that smash the Nasdaq? Yes, it temporarily will. And let's talk about the QQQ now. Now, this is what we call a marginal close below. We have the peak, we have the trough, we have the lower peak, and we actually have a lower trough. The close is lower. At the time of this recording, the futures are up in the Asian session. We're talking about 14,843. So this is the QQQ, but basically it's about 0.4% above where the closure point was. And yes, it's consistent. I mean, if we go down to a 2-hour chart, you're going to notice the whipsawing. So here is the resistance that we found, 363. Here is the support. We know we get underneath that. Next level will be that 352, and then underneath that 340. So this is a huge consolidation. Many people are going to be watching this just like the S&P 500, and closures above this zone should lead to further bullish pressure. Just like the S&P 500, if we go really high up and get back to where we were just a few days ago, I'm thinking double bottom here and continuation of the trend. So you've got to be fast, you've got to be nimble. If you are overall bullish, generally optimism will pay. Let's have a look at the Nasdaq. It's the same thing. You'll notice the marginal close below. Here's the trend line. Here's the expectation for the lows. This is pretty much what most of Wall Street will be looking at. I'm sure they will. This is a very key zone. It's not hard to see it. I think some people are talking about it, maybe not everybody. If not everybody's talking about it, generally they hold up better. We've used this for a while now, and it's kind of calling for around that 14,100 should be closed below. 14.5 will be the next zone. And again, you go into the 2 hours, it's all about just this little trapped zone between the lows here and the resistance. We close above here. What's going to happen? All the shorts that were short and having stop losses here will start to get squeezed through. We see a movement up to the 15.2. And then if we get past that 15,350, we put that double bottom in place and go, of course, optimistic bull into new all-time highs. We've got a pattern here. Either way, we close below, weakness 14.5, 14.1 potential. We close above here. We see that bullishness into 15.2. We get above 15,350, double bottom in the bigger time frames, and we move higher. That was the dip that we saw. All of these percentages make sense. Even the percentage pullback back to the actual Nasdaq trend line makes sense. That's around 10%. 8 to 10% is what you expect in any good correction. It's very normal. It's very healthy. And if we do bounce off that, it's actually incredibly good for the market. So I'm looking forward to finding out what happens next. Let's move over to the cryptoverse. The support of 40,700, 800 continues to hold up. First bullish style candle we're getting here, bit of a rally. Until we're through 45, we're just stuck in a range between this zone. But overall, Bitcoin and Ethereum are kind of leading the way. If we move over to Ethereum, you'll notice on the smaller time frames, 1 hour, got a little bit of a double bottom, actually got a confirmation close on the 1 hour above that. This will lead, you would think, into bullish buying. The bullish buying will go into just underneath 3,200. And if we get past 3,200, what have we done? Closed above the massive channel, and we start talking about 35, 36 again. So Bitcoin and Ethereum looking better than they have over the last 24 hours. And if they can sustain these bull runs here up until the highs, then at least we can see whether we get that really big final push of money to get it to the next level, 3,600 plus. Remember, Fed Chair Powell. He's speaking, guys. When he talks, things move regardless of what he's really saying. We do have him coming out on the Thursday session, 10 a.m. New York time. And I want to just also remind people that while you might be getting bearish on the markets, and there's valid reasons, don't get me wrong, there's plenty of reasons out there. Statistics, if we're using statistics, we still want to be overall optimists on the market, because statistically, while when we have a 7-month kind of win streak or an 8-month win streak in a row on the S&P, it's quite rare. And every time, while we have had some weakness the next month, we tend to come back in 3 months' time and 6 months' times with positive results. Now, does this always work? No, it's just statistics, but something to keep in the back of your mind about why optimism pays in the market. Thanks so much, guys. Remember to subscribe if you enjoy the videos. And of course, we'll be coming at you 1 hour before the New York session. Bye for now.